So what I'm gonna talk about today is I'm gonna take a quick look, kind of what's going on as we complete harvest here and move into 2019, as to what we're looking at in terms of corn and soybean prices in particular. If you do have a question about cotton or wheat, please let me know, and I'd be more than happy to answer those as well. Just as a reminder, we do end up recording these, so they will be posted to the website. All of this information can be found on the Crop Economics website, which is the address down here, cropeconomics.tennessee.edu. So you will be able to find copies of the presentation and of the recordings there as well. So if we look at what I'm going to talk about, is I'm going to briefly talk about the November WASDE. It came out on the 8th, and there was some interesting information in there. I'm not going to spend a lot of time, but it is worth noting that there's been a few changes that are going to potentially impact where prices are going. Then I'm going to talk a little bit about basis, what's going on with basis in Tennessee, and then look at kind of some price projections for 2018 and 2019. So when we look at what's going on after the WASDE report release, this is a 5-minute interval chart. So these are each bar represents 5 minutes, and you can see when the report was released. This is the December corn contract for 2018. We had a substantial jump. Now this isn't abnormal in itself. We quite often do end up getting rapid movements right after the report, and a lot of that is due to a lot of the algorithmic trading that ends up going on. There's a 13-cent range that we ended up seeing, the immediately following that report release, and then we kind of stabilized, and we've kind of slid down since then. So again, that's something where that report, you're always going to see an increased amount of volatility immediately following that report, and then typically what you'll see is the markets kind of move in a direction based on the underlying numbers that were contained in that report. So if we look at kind of just a real quick summary of what was in there, we did end up seeing U.S. average yield come down 1.8 bushels. It's still estimated at an all-time record of 178.9 bushels per acre. So a substantial amount of corn is still out there. 152 million bushel drop in U.S. production. Feed down 50 million, exports down 25 million. A lot of that just going to be a straight response to the decreased production. U.S. stocks are still down 77 million. The big surprise, and it's a gaudy number, but there's not really a whole bunch of long-term implications that we'll see out of that. But foreign stocks went up 5.91 billion bushels, and that is a massive number to say the least. If we take a look at it, this is kind of the corn WASDE over time, and what I want to highlight is this foreign stocks number. So when we end up taking a look at it for the 2014-15 marketing year, we ended up seeing massive revisions to all of these numbers. So you can see in 2014, 2015, we've seen these jumps. A lot of these revisions were historical. So you can see back in October, they were projecting foreign stocks at $4.4 billion, whereas now they're projecting them at 10.37. And the reason for that is there was some additional information that was released out of China. And so pretty much all of that 5.9 billion bushels was stock estimates that they made in China. And so, again, yes, it does have some implications in the fact that China is holding more corn than what was originally anticipated, but does it really affect global prices? And the answer to that is no, not really. The big issue with China is when they produce or they have stocks, those very, very rarely will make it onto the global market just due to the amount of corn, soybeans, and wheat that they are using. So again, it doesn't have a huge implication long-term in what global corn prices are going to do. What it does potentially have an implication on is affecting what China is importing. Now, again, the reason why I don't think it's going to have a major influence on what's going on globally is just because China isn't historically a major importer of corn. Yes, they bring in some products like DDGs and some of the processed products, But again, I'm not foreseeing a major impact. The other thing that is still important to note is from where we are still anticipating, almost a 1.5 billion bushel drop year over year in corn stocks. And so that is an important consideration. Yes, kind of maybe where the baseline has changed, because a lot of these revisions go back to the 2007, 2008 time period. So again, there's a bunch of stuff that's going on behind the scenes, but to me, it's more just how the USDA is reporting this. Has anything changed with the underlying outlook? Not really. So if we look at Chinese corn stocks, what we will look at is the imports from 1990 to 2018. You can see China accounts for about anywhere between 0 to 5% of global corn inputs over this time period. And for the 2018-19 marketing year, the one that we're entering right now, China's projected to end up importing not quite 200 million bushels of corn, which again, when you look back at what the balance sheet ends up having for our total use is a very small amount. So again, that's one of the reasons why I don't see these revisions as a big issue in terms of long-term price ramifications in the corn market. The number itself is really kind of massive when you just look at the sheer magnitude of a 5.9 billion modification in historical stock numbers for China, but the implications really are much more muted than that. We look at global corn production and consumption. Again, this is an update from the one that I showed last week. But again, what you can see is we've had a build in these global stocks, but the last 2 years we've ended up seeing stocks start to come down. So again, from a high in 2016-17, we've dropped about 1.6 or projected to drop 1.6 billion down to 12.1 billion bushels. So again, we would expect a positive price response due to that decrease in stocks. Now again, what we've ended up seeing is we've seen pretty consistent consumption, and then we've seen kind of production upward trending, but again, a little bit more inconsistent. So we expect those to continue as they've been going the past few years, where we've seen continued increased consumption. The one thing that is kind of interesting on the production side is we've kind of seen a flattening out of global acreage. Where we've actually been seeing this growth on the production side is yield. We've seen yield go from about 78 bushels per acre as a global average up to that 92 range. So again, back when we were looking in the 2010, 11, 12, 13 time period, when we ended up having really high global corn prices, we've seen a whole bunch of new acreage come into production. That is not what's driving this production increase as we've moved into these past couple of years here. What's been driving that is just yield improvements, and that goes into, again, that production methods, the seed technology that's available. There's some positive things there, but again, in terms of global acreage, we've somewhat flattened out. We look at January soybeans. This is the same thing from the WASDE release. Again, we didn't get any massive historical revisions to soybeans. I just wanted to point out that when that WASDE report is released at 11 a.m., it's usually right around the 10th of the month is when it's released. But you can see there's a tremendous amount of volatility when you're coming into the report. There's kind of a consistent trading range. You get some volatility, and then the report kind of dictates some direction for the next few days. So this is a 5-day interval here. This is when that report is released. What you can see for soybeans in that 5-minute interval right after the report release, what we ended up seeing is about a 20-cent trading range. So again, added volatility, and then you kind of see a price trend or a direction end up emerging from the market after that report has been further digested by market participants. In terms of what ended up happening with the WASDE report, they knocked yield down for soybeans as well, down 1 bushel per acre to an average of 52.1. Again, a lot of it has been a tricky harvest period in a lot of places, including West Tennessee, where we get these consistent rains. Middle Tennessee as well. We're getting these untimely rains. It's making it hard to end up getting the crop out or what's left of the crop out. And so again, that has ended up potentially having ramifications in terms of decreasing yield, not just here, but in other areas as well. U.S. production down 90 million. Crushing has remained very strong. That's a real positive in the soybean market. Exports down 160 million bushels. That's a pretty good sized revision, but the market was largely anticipating that due to the continuing issues that we've seen with China. And then U.S. stocks up 70 million bushels to 955 million bushels. That stock number is really something that is a little bit concerning. Yes, inability to export significant quantities to China is definitely detrimental to the market, but we've really continued to increase that U.S. ending stocks number from 2014, where it was at 191 million bushels, all the way up to 955 million bushels. What you can see is, yes, there has been a decrease in exports. There's been pretty consistent growth in past years, but what we're seeing is about a 250 or 230 million bushel step back from where we were in 2017. If you say that, typically we've had about a 100 million bushel growth, it's about a 350 million bushel difference, which again would take us kind of down into that 600 million bushel range in terms of ending stocks if we did end up having that export growth. But again, that still is an upward trend in ending stocks, which does not bode well for prices. If you look at foreign ending stocks, those are down. A lot of that is, again, driven by China purchasing massive amounts of Brazilian soybeans, so depleting their reserves. But you can see our domestic increase of 517 million bushels year over year is substantial and is going to limit price movements to the upside for soybeans. Just to give you some historical context, I had to go back and take a look at where we have been in terms of ending stocks from 1985 to 2019. You can see the two previous highs back in 2007 of 574 million bushels and 536 million bushels. So again, just to put it into context, and yes, we have seen tremendous growth on the use side. So again, what we have to look at is stocks relative to what we use, but 955 million bushels is a substantial amount of reserves that we can't crush our way out of it. It's got to be an export market-driven reduction if we're going to end up chewing through some of these stocks. Now, I'll talk about it a little bit later, but again, I think it has some severe ramifications for where we will see planting and prices as we move into 2019. Again, you look at those global stocks or production, consumption, and ending stocks. Again, what you've seen is since 2011, a continual upward trend in global stocks. We're estimated at 4.12 billion bushels. Again, most of these stocks are going to be held in four locations: the U.S., Brazil, Argentina, and China. China obviously not on the production side, but on the consumption side, they maintain substantial stocks to meet their crushing needs in their livestock industry. But what we've seen is in recent years, we've seen that production has outpaced consumption. Anytime you see that, you will end up seeing a build in stocks. The one thing I will point out, though, is that we've seen really, really strong demand for soybeans. We've kind of produced more than what we've been using, but the demand has actually been really strong. If you think about moving from, about 10 billion bushels worth of consumption in that 2012, 2013 to over, about 13 or not quite 13 billion bushels in 2018, 2019. You're talking a 20, almost 30% increase in consumption, which is positive for the market. So again, there are some good things, but these stock numbers do start to end up getting a little bit concerning in terms of price direction in the short term. Just kind of a quick supply and demand takeaway. There's plenty of uncertainty in soybeans, just with where we are in terms of stocks, with the South American growing season. Their key production time period is October through February. So a lot of where our price direction is going to end up being dictated is what happens down in Brazil and Argentina. Right now, their production has looked really good so far. They've been ahead in terms of planting, and they've had reasonably good growing conditions. So right now, that's looking positive, but we all know that that can change dramatically on a week-to-week and month-to-month basis. Looking at U.S. planted acreage right now, where our current price ratios hold are, what I would anticipate us seeing is a shift into more corn and cotton acreage. We'll talk about where 2019 prices are. Obviously, that's a double-edged sword, right? If we have beneficial prices right now that are favoring corn and cotton, and we get a whole bunch more acreage that is going to be planted, it'll pull prices down. So again, there's always those types of dynamics that need to be considered. You look at resolution of the trade issues with China. I think that is really the key. There's a huge amount of uncertainty there. If we can end up having a beneficial deal or even resolution of where we're at with the Chinese, that'd be huge for the soybean markets. We've seen, when President Trump tweeted that he had a good meeting with President Xi, I guess it's been 2 weeks ago, we've seen soybean prices on the futures jump up 30 cents. Well, that's something where if there is a resolution there, we could easily see, a dollar move in soybeans, depending on what the details of the agreement are. For corn, what we've seen shrinking global stocks for the last couple of years. Now we have been we've seen the price effect domestically has been a little bit muted just because of the record U.S. yield and large stocks. But again, we would expect that if we can balance out our large stocks by accessing export markets and expanding trade with partners around the world, that we would end up seeing some additional benefit in terms of additional price strength. And again, there's that double-edged sword of U.S. planted acreage. If right now we've got December 2019 futures at $4, does that pull in some more planted acreage relative to soybeans? I think the simple answer is yes, but again, there's a lot of time between now and when we start planting the 2019 crop. One thing I do want to quickly look at, and this is just again for kind of a point of reference, I know that yields across the state are kind of all over the map, but if you look at average yield for corn in Tennessee, if we look at where we're at right now, we're projected to harvest in 2018 173 bushels per acre, but a trend line yield for 2019 would be around 157 bushels per acre. Again, we've had multiple years, as you can see, of over trend line years or yields. So again, it's not to say that this is what the yield will end up being, but just kind of a reasonable projection. Now, one thing, and this is kind of the more important number to me, is if you look at over time on a per bushel per acre basis, in order to end up keeping pace with the average in Tennessee, your farms need to end up looking at adding about 2.2 bushels per acre per year. Now, you're not going to do that every year because there's a tremendous amount of weather variability that's built in there. But again, the better way to maybe look at it is over a 10-year period. In order to kind of stay at the average, you want to be looking at increasing production at about 22 bushels per acre over 10 years. That's just a rough estimate, but again, we are seeing with these improved technologies and production methods, we're seeing a very strong yield response over time. Similar picture for soybeans, where we're projected down a little bit from where we were in last year, and again, that's a lot to do with the harvest issues that we've ended up seeing. Our trend line's around 45, but again, what we're looking at is over year over year, we're looking at an increase of about 0.6 or 0.6 of a bushel, so 6 bushels over 10 years. That's just a back of the envelope type thing. What you will see is you'll see more variability in soybeans. That's what this R-squared number is getting at. I do want to quickly provide an example of 2018 gross revenue. And again, I think this, every year marketing is a little bit different. You're going to have times when forward pricing is a much better alternative. Cash sales can sometimes be a better alternative. Storing the crop can sometimes be an alternative. But what I really want to get with this slide is kind of how that directly affects what your revenue is from those fields. So in this example, I took that state average corn yield, and I am saying, okay, well, what happens if we forward price 33% of it? This is the average, the Tennessee average cash forward price from March 1st to June 30th. That average came out to 386. So if we priced 1/3, that'd be 57 bushels per acre, give you a revenue of $222.61. Similarly, if we had to end up pricing during or selling directly off the combine, I took the August to present cash price average, and that was $349 a bushel. Take third production of that, gives you $201 per acre revenue. We do have our little market facilitation payment here, which is not substantial in corn, but it definitely is in soybeans. So again, these are the trade mitigation payments from the Trump administration. This is only the first payment. There will be another payment that will be announced early in December. So again, that's one to look forward. But as you can see, on full production, it's only a half a cent per bushel. So that's only giving you 43 cents of revenue per acre. Again, much smaller than what the soybeans would be at 39.6. Crop insurance, that's going to be a farm-specific, source of revenue. I didn't put anything in here. I don't think we're going to see a lot of indemnities triggered just because of where our yields are projected to end up being. And then the other one I threw in here is pricing 1/3 of the crop, just straight storage. And so what I looked at was the average of the January delivery period. And you can see right now the average across the state was $373 on 33% of your production would give you $215. ARC and PLC, we're not projecting payments for very many counties. And again, that's a different type of program just due to how it triggers a payment a year after the crop. I have a tough time putting that in a gross revenue calculation as it is. So I would give you a total of $639.41 for gross revenue under these scenarios. If you priced it all just at harvest, $604. As I mentioned, that's going to vary year to year. But again, what are we trying to do? A lot of times with marketing, we're trying to end up managing our risk. And when you put all your eggs in one basket, you have much higher risk, both to the upside and to the downside. What this does is kind of shows that smoothing effect where you're getting, instead of one price at harvest, you're getting a forward price and you're getting a stored crop price, which is going to end up allowing you to have kind of a spreading out of the risk over 3 different pricing intervals that you would end up having available. Now, one thing I didn't throw in here, I didn't put any storage costs in there, which is important. You can see the similar thing with soybeans. Major difference in soybeans, as I mentioned, is this market facilitation payment of $39.60 an acre. Make sure that all the producers out there end up maintaining really good production records. You will have to go into FSA to certify your yields, but they are subject to audit down the road, so that's an important consideration. Now, as we look to the rest of 2018, this is the December 2018 corn futures contract. What we've seen is a very consistent trading range since about October 1st, where we've traded between 360 and 380. I would anticipate that to continue, with obviously issues such as trade issues with China and those types of things, providing potentially a breakout one way or the other. We looked at monthly average corn basis. Now, this is where I think there are some opportunities from a marketing standpoint. What you can see, this is our monthly average corn basis. You can see it's been reasonably predictable over time since about 2014, where we get kind of the harvest lull or the weakening of the basis during the harvest interval, and then we end up seeing a stronger basis as we move further away from the harvest period, which is typical. Now, one thing I will point out is you'll see when from 2013 to 2018, when does that basis really turn positive? Here it was December, and then December again, or January here. So what I would anticipate is we would probably end up seeing something very similar, where we might not get back to a positive basis in December, but in that January time period, I think that we will end up seeing some opportunities to capture that basis. So that's a consideration. If you do want to end up looking at maybe fixing the futures, and letting that natural basis improvement, you'd have to take a look at what the January basis is doing in individual locations. Carry in the corn futures market. So this is the carry between different contract months. So we have December as kind of the base, and then the deferred contracts March through December 2019, kind of looking at what the per month available carry in the futures market is, 3.85 or 3.85 cents to 3.82 cents, targeting somewhere in there. Might not be a bad idea, but again, even March at 3.75 is a decent carry. You'd have to take a look and see what your storage costs are relative to carry in the market. Look at soybeans, kind of similar thing, but a little bit wider trading range for the January 2019 contract, where we're going from 8.45 to 9.05. Again, this one's a little bit more difficult to predict because of the non-production and consumption-related factors that are going to end up influencing this market. And by that I mean trade issues. So again, if we see something emerge out of China, we could really end up seeing something positive happen here. But without that, I think we'll probably continue in this type of a range. November 30th, when they meet down when President Trump and President Xi meet down in Argentina, is going to be probably a pretty important date in terms of will we end up seeing movement on this. So that's one to kind of keep in the back of your mind. This is where things have kind of changed, over time. And I think a lot of this has to do with that expanding stocks. You can see that it's a little bit more, there's not as predictable of pattern in soybean basis in Tennessee as there has been in corn. And so again, what we've seen is obviously very, very, very deep or weaker basis this year than in past years. And again, I anticipate that basis will probably stay reasonably weak as we move into the new year. It's not going to stay at the extreme lows where it's at, but to expect that that's going to turn positive in most locations is probably not as likely, just because of the size of this year's crop, and there's going to be a lot of beans that are going to be stored out there. You look at the carry again in the futures. You look from November through January, March, again 5.5 to 6 cents. You look at the higher end, May, July, 6 cents, just about 6 and a quarter and 3 and a third cents. So again, looking at what that is offering versus your cost to store. When you look at November 2019, this is the November contract. Again, this one is a really challenging market to predict because structurally there's not a lot to really go off of in terms of a technical standpoint, and with the uncertainty regarding policy and production down in South America, you can make an argument as to where to look at pricing a product. Right now we're at 9.30. You can make an argument that even at 9.50 or so, we're $1 higher than where prices are now. So do you want to start looking at some price action there? And by that I mean, it's not to say to price through the futures market, but look at the futures market to guide when you will make a decision to either forward contract or use options or whatever pricing mechanism you want to end up using. But at 9.50, if you are going to plant soybeans, do you want to take some price action in that area? Maybe. Again, a lot of it depends on your risk tolerances and what you can end up looking at in terms of locking in some profit. Now, to get back up to this $10 threshold, which I know a lot of people will be looking at in terms of doing some pre-planting pricing, what would we need? We'd likely need some type of disruption down in Brazil and or a trade resolution in China. So again, where you set that pricing target is kind of an individual decision, but as of right now, there's not a lot of, you can really have a wide range in terms of where you want to look at setting that price, but I do encourage people to look that far out as far as pricing some of the 2019 crop as we move into 2019. Corn, I think, is a little bit easier decision. Again, there's a lot of challenges with corn markets. I'm not saying that it's a simple simple market to end up pricing. But again, where I've really started looking at is anywhere between that 405 and 420 range. I think given where our historical basis is in Tennessee, I think that gives us an opportunity to have some profitable outcomes if we get average or above average yields. And if you look at where we're going in terms of global stocks, yes, we could end up seeing some additional upside to this market, but my worry is if soybeans stay down and there's no resolution with China, and we see a massive jump in corn acreage, we could see this market come down as well. So again, I'm not saying you need to get aggressive at the 405 to 420 range, but looking at putting a toe in the water, 5, 10, maybe 15% of production. Maybe look at considering pricing at that level. So this kind of take-home message. That quote is from Planes, Trains, and Automobiles. That's one of my favorite movies of all time. So again, you always want to have a point when you're providing a story or a message. So again, for the old crop, look for basis improvements. I think that's one where we have some opportunities with crops that are in storage that we can end up taking advantage of. For new crop, again, for corn, I like that 405 to 420 range in the futures market to start looking at taking a little bit of price action. For soybeans, it's a little bit more challenging. But again, if you are planning on planting soybeans, figuring out where you're comfortable making some initial sales, anywhere between that 940 range and above, I think is a very valid place to start pricing a little bit. Just because of the massive amount of uncertainty within that commodity due to issues with trade and stuff that's outside of our control down in South America. So with that, I do want to remind everybody that we set the 2019 dates: March 6th, June 12th, August 21st, and November 13th. Same format. So again, we will end up continuing to do these meetings as we move into 2019.